SoFi stock has been absolutely on fire. It's up over 51% in the past month alone. It's up around 20% in the past 5 days. Momentum and sentiment are both at recent highs. And in this video, I'm going to cover with you recent news around the company and why I think the stock has the potential, big disclaimer, has the potential to reach $20 by the end of the year. Let's jump right in. If you couldn't tell by my background from now, I am back in Canada. It's been a super long travel day. Over the past 24 hours, we actually had to push back SoFi Weekly by one day. So we will be doing that at 10 p.m. Eastern I guess today, Saturday. It's like 3 a.m. for me as of this recording. I took a small nap, but I'm still on Asia time mentally until I acclimate. And so I thought, what better way to celebrate than to hop on and make a SoFi video? And for those of you who are new to this channel, I try to do SoFi videos on a weekly basis, but I haven't been able to be as consistent as I would have loved to have been because I've been traveling. And just before I get started, I also wanted to thank Matt Flo for this SoFi Stadium hat, which is pretty cool. He sent me this. I'll be putting it in the background there along with my Tesla tequila. So I officially have a piece of SoFi merch. Is that why the stock has broken 52-week highs? Because I now have the merch. Is that the missing piece, the cosmic missing piece to unlock this whole rally? Is me getting a single piece of merch? It could be. But jokes aside, thank you, Matt. It's really lovely, and I appreciate the gesture. And yes, in this video, I will also talk about my covered calls and how I'm adjusting accordingly. So for a lot of you that I've been following on X and you want to stay tuned for that, I'll get to that by the end of this video. Okay, so SoFi's been rallying, but much of the market has been rallying because it's a macro event. We had the presidential election on Wednesday. We had the Fed cutting rates earlier this week, and all of it has relieved some uncertainty in the market, right? We had a huge rally, partially because Trump is going to be good for the economy, so people are buying in, but it also answers an outstanding question that the market had. Who is going to be the next president? What are their policies? So on and so forth. And then we also saw a sustained rally after the Fed cut by another 25 basis points, I think on Thursday, but all my days are jumbled together. So there's a piece of uncertainty there that's alleviated on the macro because it's something that will benefit SoFi. And I've talked about this on multiple videos in the past, how rate cuts exactly benefit SoFi. So make sure you check those out. But just to reiterate the thought very quickly, it's twofold, right? On one hand, it benefits SoFi not only from the fact that it's a small market cap company that's going to catch a bid in 2025 because you have $6 trillion in money market funds that are going to flood back into equities as the treasury rates fall, and that money is looking for a higher rate of return. I think, a lot of that is what we're seeing right now is we're seeing people plow into the indices because the Fed is continuing to cut rates and because they're seemingly dovish. And because what we saw recently with the question and answer around Jay Powell, there's going to be seemingly a conflict there between Trump and Powell, whereby Trump is going to be pushing to have that economy higher and higher, and Powell is going to be more hawkish, urging caution there.
Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
But either way, money is going to flow back into equities because that treasury rate is falling. And yes, you might argue that there's no investor in the world that's equally okay having their money in a very much wealth preservation mechanism, which is treasury, getting single-digit returns year over year. That's also okay with bringing that money into, a growth stock with a small market cap such as SoFi. And there doesn't need to be a correlation there because investors can just buy the indices. They can buy the NASDAQ, they can buy the Dow, they can buy the S&P, they can buy the Russell, and they can allocate across indices to get diversification. But ultimately, with that money back into equities, it's going to flow back and we're going to see higher price tags. And the second way that SoFi benefits from falling rates, just to finish off that thought, is that it helps SoFi's core business in student and home loans, right? If I'm buying a home, I might hold off if interest rates are at 5% versus if they are at 0, then I'm going to be breaking down the door trying to buy a home because it's beneficial for my wallet. And so as rates keep falling and falling, then both the student loans and the home loan side of SoFi's lending business are going to benefit. So rates are one thing and the results of election are another. And they're two of the big reasons why the market has had this very violent rally over the past week. And here's why I think this rally is going to sustain itself. And I say that in spite of pullbacks. I mean, pullbacks I think are healthy. I don't think it's healthy for stocks to go up 50% in a month or 20% in a week. Or, I mean, SoFi's not even been the craziest name this week. You have Tesla, you have Palantir, you have Upstart. There's been some crazy gainers this week. And I think that the market as a whole is going to pull back. But generally, I think we're at an uptrend. And I do expect this trend with all of these names to continue going up and up and up because of those uncertainties that have been alleviated. It's just a matter of how aggressively they go up and in what time period. But directionally speaking, I mean, the sentiment is very much more euphoric today than it was 6 or 12 months ago, especially in a name like SoFi that's been underperforming. And so SoFi closed today at $13. I mean, the last time I was in this range was in 2022. So for the droves of new investors who have been buying this name over the past 24 months, you might not have ever seen a $13 price tag on SoFi ever before in your whole history of owning the stock, right? You might have bought in at 7 and you might see it at 13 today and you might say, wow, I'm almost at a 2x. That's fantastic. I mean, there are investors like myself and others who cover the stock that were in this thing in 2021. And we have seen $20 price tags on SoFi in the past. But a whole class of investors that have been buying over the past year have never seen that. And there's a couple of things to highlight here is that analysts are raising price targets now. We're seeing this left and right. We're seeing institutions buying in heavier and heavier left and right. And yes, I know Kathy has been dumping stock every single day this week. I think she sold SoFi over the last 3 days in a row. But honestly, who cares, right? Because look at the institutional numbers on an aggregate basis, and you're seeing that other institutions are picking up those shares, and it's not really hurting the sentiment. I mean, there was a time in 2023 where a single analyst would downgrade the stock, or a single institution would sell the stock, like Kathy would sell, and the stock would be down 10% the next day because of that incredibly low sentiment. Right now, we're not seeing that. We're seeing that the momentum is continuing, the trend is continuing, the strength is continuing, regardless of, Kathy Wood selling stock. Because on a whole, institutions are adding more SoFi today than ever before. And I've made several videos over the past couple of months, even before this 50% rally, about this virtuous cycle thesis, basically saying that as the stock goes up, it goes on the radar of so many of these analysts and these institutions who then issue very positive sentiment because the stock is going up, right? They issue increased price targets because if I'm somebody like Dan Dolev, for example, and I'm bullish on the company and I have a $12 price target and SoFi is $13, well, I have to raise that price target because I'm bullish on the company. I'm issuing a buy and the company's trading for above what my price target is. And so once these analyst upgrades come in and institutions are buying more and more, then that in turn dictates retail sentiment, which makes the stock go up even more. And then you get a short squeeze and you get all of this wonderful stuff that comes with it. And that's what we're seeing play out right now. And that's also the reason why, if you go back a couple of months at my videos, you'll hear me saying that this time is different because while we might see a pullback, and I think that's also a healthy move, by the way. If we do pull back, I don't think 50% moves in a month are necessarily healthy. Ultimately, though, I do think we are forming a new trend. I think the macro supports that. I think company fundamentals support that. And even if you look at most valuation models in the world, I mean, not other than price to book, $13 with this company's fundamentals, there's a strong case to be made that that's still very undervalued. So there is a lot of room to run, even from a valuation perspective for this company. So there's just 3 things that I want to direct your attention to, and then we can talk about the stock price, and we can talk about my position and what I'm doing with my shares. The first is that this company, as of last reporting, still has about 18% short interest. And we know that after a volatile move upwards, the shorts are absolutely underwater. I mean, they were underwater at $11, let alone at $13. And it's going to be really interesting when the new short interest numbers come out to see how much covering there's been, because in the past, when we've rallied, we've seen shorts double and triple down, betting against that company even more, as opposed to covering their shares. And so we're going to see if that changes this time around and if we actually see more covering, because otherwise, all you're doing is you're adding more fuel to this fire for a potential short squeeze. And if you're thinking, wait a minute, Tevis, short squeezes don't happen, they don't happen with 18%. Look at Tesla this week. Look at Upstart this week. There's short squeezes happening left and right. And I think SoFi could be a very prime candidate. The more it goes up, the more pressure it puts on these shorts. So that's the first thing. The second thing I would say is that to support this, look at the stock over the past 5 years and look at the technical patterns. We're seeing this massive base that's been forming over the several years. And we're finally breaking through that base from a technical perspective. And we have this management team that's consistently executing. And you put all those things together, and there comes a time where, I mean, I saw this with Tesla in 2020, right? The market just re-rates the stock all at once. And that happens at the blink of an eye. And just a recent example, right? Zoom out to Tesla prior to their earnings. Their stock was $213. And right now, they're over $100 a share more today than they were 2 weeks ago, 3 weeks ago. And so I think SoFi does have a strong potential to go to $20 by the end of the year. And I say $20 by the end of the year, and immediately people just tune out because it's such a stretch. But really, all we need is we need the performance that we had over the past month to repeat itself until the end of the year. And then we're there. We've had a 50% plus move in a month. If we have another 50% plus move in the month, we're basically at $20. And yes, it's difficult to do. And I don't think it's the most likely thing. But if you look at the short interest numbers, and if you look at the technical breakout off of this multi-year levels, and if you consider this macro environment, I don't think it's really that impossible. I think a lot of pieces are in the perfect position. And I think the stock closing above $13 showed real strength today. We had a really good move today. I made this post on my X and I said, prepare to see more of the following in your feeds. I should have bought more. I didn't have time to accumulate. Is it too late? Did I miss the boat? Are we going to $20 by the end of the year? And you see people commenting their own comments there. I mean, Roy said Anthony Norris should be fired. People saying that they should have bought more. People saying, I hope it pulls back to 8 where I can actually buy more, or FOMO fully kicking in. And the reason for this is because sentiment follows price. And we right now are on an upswing, and the sentiment as a result is very euphoric. There's going to be people that are chasing this name. There's going to be people who have done very little research, and there's going to be people who are just going to be buying in blindly because they think it's going to go up. I'm not saying that's healthy. I'm saying it's reality. And for those people buying in at 13, $20 is a very possible reality. I mean, for people who are buying in at $6 or $7, 6 months ago, $20 might seem like a dream, a mirage, but like you have people buying in at $13 right now. $20 is like a 50% move. And so, it's very much a reality. Now, as for myself, I wrote $12.50 covered calls for today's expiration. I ended up rolling those to $13 for next Friday and $14 for Friday, November 22nd, 2 weeks from now. I honestly think SoFi is going to blow through both of those numbers over the next month. I think that the rally that we're seeing, I mean, it's going to be very healthy for us to have a pullback, but I do think that, we could blow past $14 over the next week. But in spite of that, I only rolled them out a couple of weeks. I reserve the right, I think, to roll them out even further, but I didn't want to just jump the gun and roll out to December to January. Number one, because I think it's good to take profits every now and again. And even if I'm assigned today, that would be a quarter of my SoFi position that would be assigned on. And I'm only writing covered calls with close to half of my SoFi position in general. So half of it is just sitting there collecting more and more capital gains. And I'm not touching it at all. Same with Tesla, right? There's a huge percentage of my Tesla position that I'm just not touching at all. And then the rest I'm writing covered calls on. The second thing is I'm taking the premiums from these covered calls on SoFi and I'm buying long dated calls with them. So basically we've had a 50% move in a month. If there is weakness, which I mean, we'll see if there is or not, but if there is, I'm going to close off that $13 or that $14.50, strike price and collect that premium and continue to buy long dated leaps. There's quite a few leaps I have for 2026, 2027, scattered all throughout different strike prices, all throughout different dates. I have strike prices between $12 and $20. I think I also have some $10 strikes for 2026, which are all very much in the green. And I also own quite a few January 2025 calls with a $15 strike price, which is doing very well. And so I guess technically I'm doing something closer to like calendar spreads, where I'm selling on a short time frame and using the proceeds to buy on a longer time frame so that I can capture some upside while also locking in some premium. And if I get assigned, then that's fine with me because I can still capture the upside from a leaps position on the second half of that trade. But to this point, I haven't had to lock in any SoFi profits. I am holding the full amount of my position and I can just roll those shares to a later date. I suspect I'm going to have to roll again next week if we are seeing continued strength. We haven't had a red day all week this week. We had like 3 green days after the election. The strong momentum, I think, can very well continue to next week. But if we do see red days on SoFi, then I will close those out and I will write further out. And just on that last point around the pullback, this is the same emotional rationale, just flipped on its head. I mean, if you go back and you listen to my videos, a year ago when SoFi was at $6 or $7 range, many people in the comments and also on X thought that the bad times would never turn around, thought that just because it went to 7, it can go to 4. And just because it goes to 4, it can go to 2. And just because it goes to 2, it can go to 0. Well, all of a sudden, those same emotional sentiments are now flipped with people saying, just because it went to 13, it can go to 15. And just because it goes to 15, it can go to 20. And just because it goes to 20, it can go to 25. And yes, it can, but that's equally dangerous because you're doing that with the expectation of a short time frame turnaround. And you could be seeing pullbacks and you're stuck in a position where you're not taking profits at any point and you lose out on that opportunity. And so essentially for me, I recognize that, and I recognize that taking profits is something that I've historically been bad at. And so I'm going to roll into the mid-teens and then just let my shares get assigned at some point, $14, $15 a share for a percentage of my SoFi position, and then take a percentage of those gains and buy leaps with them. And with leaps, I have unlimited upside. I can choose to exercise the leaps if I wanted to at expiration date, and I've locked in a good amount of profit by doing that. So the first disclaimer is I'm not doing this with my full SoFi position. I have 6 figures in SoFi. I think it's going to be a bit reckless for me to risk getting it all assigned at $14. That's kind of silly. But my plan is to eventually tranche out through covered calls and keep writing on half of my position and using those premiums to buy leaps and then roll out further. And if I do get assigned, I'll lock in a 2x gain and I'll take 10% of that gain and buy leaps with that position. So I think to recap, SoFi has broken out from any way you look at it, macro, fundamental, market psychology. I think you can go higher. I think $20 by end of year, it's going to be tough, but it's definitely a possibility. I'm selling covered calls on 50% of my position and I'm buying leaps with the proceeds. I have open long calls for $15 for January, and I have strike prices all throughout 2026 to 2027. If assigned, I'm going to put 10% of my capital back into more long dated leaps. I think we will get a pullback. And, I urge caution to people who are blindly buying SoFi stock without doing any homework just because it's gone up 50% in a month. And just the last thing I'll say is that you guys have followed this channel all throughout the ups and downs of the stock for years now. And I think it's starting to finally crystallize that there is real money to be made here. And the things we've been saying for such a long time are finally coming to fruition. And I think that's a very exciting thing as a SoFi investor, and also with Tesla and Bitcoin as my highest positions. I mean, this has been probably the best week ever for me from just a dollar amount. And that's really exciting, right? So I do want to just take a moment, enjoy it, celebrate yourselves for being able to hold through that pain of this company and coming out on the other side. I really appreciate everybody tuning in and watching on a consistent basis. And I think it's really cool for us collectively that have built a community here with so many of you, and that we can all celebrate this together. There's more good times ahead, and I think the party's just gotten started. So make sure to tune in and see where the stock goes. We're doing SoFi Weekly at 10 p.m. Eastern on Saturday, later today, I guess. I have to go back to sleep at some point or another, or else I'll be way too tired. And very exciting times. Thank you all so much for being here. And thank you for watching these videos and liking and sharing and subscribing. And I'll see you in the next one.